Hello guys, in this video I will try just to show you what is how to trade this extended hours. You know that in order to trade the stock market like the Nasdaq or the NYSE, the New York Exchange, they begin at 9:30 a.m. and the market closes at 4 p.m. This is the regular time for the day. Now you can buy or sell stocks before 9:30 and after 4 p.m. Now these two times that I'm speaking about is called extended trading hours. Now extended hours, we have what we call pre-market. It begins from 4 a.m. in the morning until 9:30 a.m. in the morning. So from 4 to 9:30. Okay, you can buy and you can sell stocks as much as you like. The only thing is that they don't accept market order because there is no market at that time. So you just put what you call limit order. You check on your broker screen and you see what's the price and you buy by a limit order. Okay, suppose that the market closes at 4 o'clock and then afterwards you have what we call after market hours trading. They begin from 4 p.m. and they go until 8 p.m. It means 4 hours. You can buy, you can sell, you can do whatever you want. Okay, but put in mind that it is that you can buy only with limit order and you sell with limit order. Now, why the people, most of the beginners, they don't know about this? And because most of the time you have professionals that are trading at that time. Okay, you find big institutions, you find a lot of people, but most of them are what we call professional. It means they know what they are doing. Those guys are following, for example, news, earnings, something happened in the market, something happened to the market or to the company, an accident, anything that can change the price of the stock. Now I did give you make a video before on Facebook earnings, and I told that after the market closed at 4 o'clock there should be the earnings of Facebook. If the earnings are good, the stock will go up. If the earnings are bad, the stock will go down. This is a general thing. One of the subscribers, he bought some shares, I think 300 shares, he told me, and after 4 o'clock, and he waited like half an hour or more, and the price goes for 4 or 5 points, and then he sell for a profit. Okay, so this he uses what we call the earnings jump in the price. Okay, but if you buy some shares and the stock, we have bad news or bad things, and you see that the price is going down, you just sell. You don't stay, because maybe next morning if you stay, it will have a very large gap. Okay, and you will lose a lot of money. So that's why it's only for professional, for those who knows what's going on in the trading arena. It means the news hit the stock each time, and sometimes you get big money, sometimes you get you lose a lot of money. So you should be very careful about this. Okay, so if you have a broker, try to check if he allow you to trade from 8 a.m. From 4 a.m. in the morning to 9:30. This is what we call extended. Some brokers, they don't allow you because they have no membership for the extended hours. For example, some of the brokers begin, for example, 8:30 to 9:30 and from 4 p.m. to 5 p.m. Why? Because their membership to the exchange is just for a short time, for 1 hour. They don't want to pay more because all the members, all the traders, maybe they are investors. So some of the investors, they don't need extended hours. Okay, so it depends on the broker. If the broker is very famous and we have a lot of traders, you will find that this broker allows you to trade very, very long hours. Okay, I'm speaking about stocks. Okay, in general. And you can see something very special is that the volume is lower than the day. It means not a lot of people they trade. Another thing, the bid and the ask, you see it's very large. What does it mean? For example, when you see, for example, Facebook, you see always 1 cent between the bid and the ask. For example, if it is 50, the bid is $50, you will find the ask is 51 cents. Why? Because a lot of people are trading, so the spread is very, very narrow. It's only 1 cent. But after the market closes or before the opening, you will see that Facebook, it will not trade the same. For example, if the bid is 50, you will find that the ask is, for example, 55 cents or 10 cents, depending on the stock volatility. It means depending on the traders that are there. That's why if we have a lot of people, you see that the bid and ask is narrow. Okay, now most of the extended hours, you see that the bid and the ask is very large. That's why it's too risky. Okay, if you go to an exchange like Nasdaq or and New York Exchange, when you search for extended hours, what they say to you, you find a statement. They say the trading in extended hours is extremely risky. Okay, you should be a professional to trade at that time. At least you know what you are doing. Okay, there are some opportunities there when there is earnings report or there is a news, either bad news or good news, and some people they make too much money, but you shouldn't stay that long. If you want to stay, it means either you have a big loss or you have a big profit, so you should be up to it. Okay, so this is just a question that one of my subscribers, they say, what's this extended hours? Can I buy and sell at that time? Yes, you can buy and sell, but be careful because of this kind of trading. It's very risky. Okay, so thank you very much. If you have any questions, just